FIE equity in China, understanding ownership and avoiding nominee shareholder risks. Good morning, everyone. For foreign investors establishing or operating enterprise in China, understanding equity ownership is fundamental. Today, I want to clarify how equity is recognized for foreign investing enterprises and critically discuss the significant risk associated with the common nominee shareholder agreement. In China, the legal ownership of equity in a foreign investment company is generally determined by two key factors: registration with the Market Supervision Authority and capital contribution. The investor officially registered on the company's business license and shareholders roster, who has fulfilled their capital contribution obligation, is the legally recognized owner. This is the cornerstone of FIE equity ownership. However, a common practice that introduces substantial risk is the nominee shareholder agreement. This occurs when the actual foreign investor, the beneficial owner, asks a Chinese individual or entity, the nominee, to hold shares on their behalf, often to circumvent foreign investment restrictions, simplify procedures, or for other perceived convenience. What are the significant risks of nominee shareholder arrangement for investment company? Legal invalidity and enforceability. While there might be a private agreement between the beneficial owner and the nominee, such agreement can be challenged and may even be deemed invalid if they violate mandatory laws or public order. Enforcing your rights against a nominee in a Chinese court can be extremely difficult. Loss of control and assets. The nominee is the legal owner. They have the power to pledge, transfer, or even misappropriate the shares. If the nominee faces personal financial difficulty, bankruptcy, or legal dispute, the foreign investment company's share could be frozen or seized, leaving the beneficial owner with little resources. Regulatory scrutiny and penalties. Tax implication and financial difficulties. My advice for foreign investors in China: transparency and direct ownership are always the safest and the most compliant path. Prioritize direct ownership. Structure your investment to allow for direct equity holding whenever possible.